And welcome to our latest webinar from the Local Government Finance Professionals of Queensland. We represent finance and accounting professionals in Queensland local government, and we provide guidance papers and events for professional development. If you're not an LGFP member and would like to join, please see the membership area of our website or email admin@lgfp.org.au. It's a tax deductible $75, best value around. So I'd like to begin today by acknowledging the Weirdi people of Wangang and Jangalingu country, the traditional owners of the land on which I'm joining you today. I pay my respects to their elders past, present and emerging, and I also extend respect to the traditional owners of the lands from wherever you are joining us from today. Watamuli. We've partnered today with AEC for today's webinar, which focuses on corporate overheads. So understanding them, calculating them, allocating them across council operations, everything you ever wanted to know, hopefully. Joining us today is Gavin O'Donovan, who won't be a stranger to many of our members. Gavin, I've done a bio for you, so smile. Gavin is a die-hard Pearl Jam fan, and I just found out he's going to Oasis as well, so I'm very jealous. But officially, here's your bio. You're a powerhouse in the world of local government finance. Gavin is the Technical Director of Strategic Finance at AEC Group, where he's been helping councils, Queensland councils and other entities get their corporate overheads right for over 25 years. So whether it's crunching numbers, guiding policy, or driving regional economic development, Gavin's your go-to guy. Welcome to the show, Gavin. Don't you love what Copilot does?
Yes, excellent. Thank you, Zoe. Good morning,
so
everyone.
before I hand over to Gavin, I just remind everyone who's attending the webinar, or if welcome back if you've attended our webinars before, or if you're new. We're going to have plenty of opportunity for Q&A. So to submit any questions, use the live Q&A button that you'll see on your screen. Feel free to submit them throughout the webinar, and we'll respond to them at the end of the webinar. And the presentation will be available after the webinar through the members library on the website, as slides to be provided, that sort of thing. So, but now that I've done my spiel, welcome again, Gavin, and the stage is yours.
Thank you. Good morning, everyone. So what we're talking about is how to allocate overheads with confidence. So what is best practice? What, if you have limited resources, what are alternative methods that you could apply and adopt just to ensure that the indirect costs that council incurs in providing a lot of services to the community and to customers are recognised and recovered where possible. So what are the overheads and why do we need to allocate them? Basically, an overhead is any time and or cost incurred to assist another team or function in delivering a product or service to customers. It includes both corporate support service functions, so HR, IT, finance, payroll, etc., as well as management functions. So managers of each function or directorate also spend time in supporting teams to deliver products or services to the community. Some overheads are directly costed to cost centres, to the necessary team or function via timesheet entries or direct cost assignment. But most overheads, particularly those in the corporate support service areas, are provided without such cost assignment and are indirect costs that need to be recognised so that we know the true cost of delivering a product or service. So examples within a normal council organisational structure. So you have your corporate services directorate, the director and admin and the functions underneath. They support all functions across council. They're the traditional suite of corporate overheads that would normally look to be recovered. But as I mentioned, you still have the directorate management and administration costs within each directorate that support the functions within the directorate. Where they're not directly assigned via timesheeting or cost allocation, they also should be recognised. So overhead activity examples, we've got executive branch management, corporate administration, corporate communications, records, customer service, HR, workplace health and safety, general administration, administration buildings, depots. From a finance perspective, we have financial management, revenue rates team, finance system, payroll, accounts, asset management, purchasing stores. And in IT, we have hardware, software, support, and GIS, as well as AI, which is an increasing area. Now, why do we need to allocate these overheads that we've identified? We want to make sure that we're recognising the hidden costs in product or service delivery. Why do we want to do this? Because allocatable corporate and administration overheads can comprise up to 1/5 of the total labour, goods and services expenditure of councils, which I ran a calculation across many councils, and it's around $40,000 per employee are these corporate and administration overheads. We want to maximise user pays, particularly for those fees and charges that are on a user pays basis that we want to recoup the cost, not only to ensure we get sufficient revenue, but to ensure compliance with national competition policy. Make sure we set our utility charges and business unit fees and charges, as well as cost recovery and regulatory fees and charges in an appropriate manner. And ultimately to reduce the pressure on the general rate. And the end game is to maximise the financial sustainability of councils. So essentially, what we have here is we have all the expenditure items across the top, and then the revenue items that we want to offset against those expenditure items. We've got your operating grants. What can we control? We can control the utilities revenue, contract works revenue, and fees and charges revenue. And if we allocate overheads in setting the prices for those fees and charges, then we'll maximise the revenues from those areas, which means that we will minimise the funding mechanisms of last resort, which are your separate rates and levies and general rates. So how should we allocate overheads? Identify those functions that we want to be allocated out, which I've mentioned examples previously. Look at which functions of council provide internal services to other areas of the organisation. And as mentioned, if they're not directly assigned in terms of cost to cost centres or timesheets, then identify those costs and try to allocate them out. It's important to note that overhead functions also provide internal services to other overhead functions. And end users are functions that generally provide goods and services to external customers of council. So we want to make sure we allocate overheads to them prior to them providing those goods and services and prior to charging for them. How do we identify the costs of these overheads? We need to include labour costs, materials, services costs, depreciation, and indirect costs such as management and administration. We want to net off revenues that are received for services provided internally or externally. However, we need to limit those revenues to those that are actually related to services being provided, not general council revenue. So for the rates team, it'd be rate surges fees. We would net off against the actual labour costs prior to allocating out the residual costs to end users within the council. We exclude finance costs. We need to exclude governance costs, and I'll I'll take you through what governance costs are and how to identify them. And as I mentioned, exclude general council revenue sources such as rates and charges, operating grants, interest revenue and the like. I have noticed some councils have included those revenue items in netting off the expenditure of, say, the finance team before allocating them out, which shouldn't occur. For business activity end users, you can also look at your national competition policy principles and application of competitive neutrality adjustments and a return on capital on any overhead assets, such as the administration building, IT infrastructure, and finance system. But generally, these types of adjustments are pretty minor, and you need to consider their materiality and what extra time it takes to calculate these prior to allocating overheads out. So I mentioned governance costs before. What are they? Ultimately, we only want to allocate out the costs to end users of actually providing the support service. Some costs incurred by council functions are incurred to run the entity as a public entity, which is unrelated to the support service being provided. What do I mean by that? Examples are overall governance of the local government area, so including attending council meetings, preparing reports for council meetings, responding to councillor requests, meeting legislative requirements not required of a public entity, additional records management obligations, and additional procurement constraints. It's difficult to accurately quantify what this may mean in terms of a percentage of your cost per annum that is spent on these aspects, but some consideration and adjustment should occur for it. Within that organisational structure, I've just provided some examples here. So your councillor costs are obviously a direct governance of the local government area. Predominantly the CEO supports the councillors in that aspect, and most of the CEO's cost, if not all, should not be allocated out. Within the directorate management and administration areas, there's excess costs that are incurred there due to being a local government, such as preparing for and attending council meetings, responding to councillor requests, etc. And within the corporate services function, you'll have additional record keeping and reporting requirements and some procurement constraints. So selecting the right allocation mechanism for you. There's a range of allocation mechanisms that are available depending on the level of sophistication you require. Less complex mechanisms may be desirable where you don't have sufficient resources, and a rough estimate of cost allocation is considered acceptable. More complex mechanisms, you may want to adopt them when resourcing is available, so you have time to actually do it properly, and or end users require greater transparency and accuracy. I'm sure you've all had managers, if you are charging overheads to them, question how they've been calculated and that they're too high, etc. If you don't have that transparent basis of how you're allocating it out, then those questions may be validated. So essentially what we're choosing from here, if you've got a less complex, less work, equals less accurate, more complex, more work, but is more accurate. So let's look at some of the less complex allocation mechanisms. If you had limited resources or you don't currently allocate out the overheads, you may want to start with or wish to adopt a simple allocation mechanism. Example may be, how much in labour costs do you incur annually? How much do you estimate your overhead costs are? Divide the overhead costs by the labour costs, apply a simple percentage on cost to all labour and put that through the accounts. So maybe you say 10% on cost for labour costs, or apply the same but do it to labour, materials and services expenditure, excluding interest and depreciation. So that may be, say, 5%. A step further, you could adopt both. So let's have a percentage on cost on labour costs for those overheads that are somewhat related to the level of staffing. So HR, workplace health and safety, payroll, executive branch management, admin buildings and depots. In addition, apply then a percentage on cost on labour, materials and service expenditure for all other identified overheads, finance, IT and the like. These approaches are generally implementable without significant manual effort, and you should be able to automate it through the systems that you're using. Obviously, you need to calculate whatever that percentage may be and continue to make sure that it's okay on an ongoing basis. This is a mechanism that you can use, obviously a simple mechanism. It won't be as accurate as more complex allocation mechanisms may be. So again, less complex, less work, but less accurate. There's some examples here. So we have, if you want to apply it all based on labour costs, I've just run some overheads on the top left table there. If we want to just apply it to labour costs, so labour costs are 8 million. My total overhead cost is after allowing for governance. So I'm saying that 25% of corporate admin costs are related to governance, 50% of records management related to governance, because if I was a commercial operation, I would only need to hold half of what I currently am holding in terms of records. I come out to a cost of 1.9 million that I'm trying to allocate out across 8 million in labour. So my labour on cost would be nearly 24%. Below that, my total labour, materials and services expenditure is 24 million. So if I was just applying it to labour, materials and services expenditure, I'd have an on cost of 7.9. To the right, the alternative is, okay, I'm going to allocate HR, the admin building and payroll to labour. That's 610,000 in costs I'm trying to allocate over 8 million in labour costs. So 7.6 I'd be applying to labour costs only. And then the remaining overheads, I need to recover 1.3 million over 24 million. And I'd also apply 5.4% on labour, materials and services. That's the simplest approach that you can adopt. Going to the next step is we look at what cost drivers are most appropriate for what activities. Those simpler allocation mechanisms, essentially what we're using as a cost driver is labour cost or labour, materials and services expenditure cost, or a mix of both. So when we move to a more complex allocation mechanism, what we're looking to do is look at each overhead activity and tailor a cost driver to each activity. And what drivers should we use? Basically, you need to consider what information is available and what is the best proxy to represent the utilisation of each overhead service. So from a HR perspective, FTEs or labour cost is an appropriate cost driver, because the more staff you have, the more costs you will incur. Some councils I've seen have gone a little overboard in terms of adopting cost drivers. The highest I've seen is about 37 cost drivers. You shouldn't have an excessive number of cost drivers just to ensure that it's easy to update and understand across the organisation. 15 to 20 cost drivers would probably be appropriate in most instances. As mentioned, this presentation will be available for download, so I won't go through each of these possible cost drivers, but you'll see there I've put in all the different aspects and overhead areas within a typical council and potential cost drivers that you could adopt. So rates, billing, collection, you could have equivalent rate notices. So what does that mean? It means that if you have general rates, water, sewerage, waste on the one noticed, basically that's equal to 4 equivalent rate notices, and you put one in general rates, one in water, one in sewer, one in waste, or just do it based on the relative rate revenue collected for each of those functions. Debtors you might have based on the number of accounts, sundry debtor dollars or activity expenditure across council, creditors, purchase orders, customer requests for customer service. So there's a lot that you can look at as long as it is representative of typical use of that overhead area. We're looking at allocating out a cost bucket and what is the best mechanism to allocate that out across the organisation. So there's the ways we can do this. We can identify the overheads, identify the overhead costs, and then identify the cost drivers across the organisation. The issue, as I mentioned earlier, is that overheads use overheads. So do you allocate cost drivers to the overheads, or do you just allocate out to end users? If you're just doing a cost divided by numbers of cost drivers and allocate out once, then you just allocate out to end users and you wouldn't put any cost drivers within the overheads. But it does fail to recognise that overheads are also used by overhead activities. So a financial accountant occupies admin building floor space, has a computer supported by IT, is provided services by HR, paid by payroll, etc. A more accurate approach involves allocating overhead activities to overhead activities as well as end users. Obviously, you need to do that in several iterations, because if you're allocating overheads to overheads, they'll have a residual cost base that you then need to allocate out to end users as well. Otherwise, you won't be recouping all of your overheads. Such an approach reflects comprehensive activity-based costing and is the most complex allocation mechanism that you can apply. So again, more complex, more work, but more accurate. So this is just a simple diagram to show what I mean. Finance allocates to IT, IT allocates to finance, records allocates to IT, IT allocates to records, and finance allocates to records, and records allocates to finance. Once we get all that cost base sorted out, we're allocating out finance to all the end users, IT to all the end users, records to all the end users. So the first round, how do we use cost drivers to allocate out the costs? The top left table, we're looking at, okay, the gross costs of 200,000 corporate admin. We said governance is 25%, so we only want to allocate out 150,000. We've selected the cost driver to be dollar spend across the organisation, so that's labour, goods and services expenditure, not including interest and depreciation. So that 150,000, how are we going to allocate it across the organisation? Well, if I'm allocating it across both overheads and end users, the table down the bottom right, if I'm allocating it to records management, well, it spends 100,000 a year. My total spend across council, excluding corporate admin, because you can't allocate corporate admin to itself, is 23.8 million. So I'm looking at allocating out that 150,000 on a ratio of 100,000 divided by 23.8 million to records management. Do the same with customer service, HR, water and sewerage, waste, holiday parks, etc. And you'll see there all the different cost drivers here. So customer service allocated based on customer requests, HR, FTEs, admin building per square metre of floor space occupied by each function. Finance is dollar spend as well. Rates is based on rates collected. Payroll, FTEs, and IT based on the number of devices. So the more complex allocation mechanism, we're allocating overheads to overheads. So corporate admin is getting allocated 29,000 across all of the other overheads. So 418 from records management, 5,600 from HR. I need to then allocate out that 28,000 to everyone else. So there's a second round allocation, which is the table below. And as you do that, the amount that's allocated to each overhead function reduces. So in the first round allocation, it's about 293,000. And then it drops down to about 30,000 in the second round allocation. You do it one more round and that's probably sufficient. The level of materiality reduces significantly. So you'll see there that if I'm a water and sewage manager, if I'm allocating on this basis, I can see that in the first round there, I'm getting charged 25,000 for corporate admin, 37,500 for customer service, 61,000 for finance, 72,000 for IT. So if you do it on this basis, at least there's a justification there. If the question is asked, what am I getting charged and what am I getting charged for across the different overhead functions that are being utilised. Regarding service level agreements, this is not really an overhead allocation as such. They're used by some larger councils, particularly for significant business activities, but they generally levy overhead charges on a fee-for-service basis, so per hour and or per unit. There may be a retainer or minimum charge per month or year. They are not top-down overhead allocation mechanisms. They're more akin to a bottom-up service charge, such as a consultant hourly rate. Who do we want to charge overheads? Full overhead allocation is actually mandatory for councils in some other states, but it's not in Queensland. Some councils in Queensland allocate and journal these charges across all council functions, but others only do it for business activities, so that the utility charges and other fees and charges are appropriately recouped. The issue if you just allocate to business activities that you don't get an understanding of what the overheads are to inform what your commercial cost recovery fees or charges are. So if you are providing building services, plumbing services in terms of inspections and the like, what percentage on cost should you add to recover your overheads? If you're allocating it out to each function within council, you don't necessarily have to journal it, but at least if you have a model that does that, then you might say, okay, well, I'm getting allocated 100,000 for 2 building services. My spend is 500,000 per annum. So not only am I going to try to recover the cost of the labour and the plant to actually undertake the inspection, I'm going to add another 20% to recover the corporate services cost that council incurs in supporting the building services function. Common pitfalls and limitations are failing to exclude those governance costs that I identified, failing to exclude non-activity based revenues, so artificially reducing the finance function by netting off the financial assistance grants that are received. And I have seen some councils where that happens. So if they've sent me an overhead model and there's actually a negative cost allocation from finance to everyone else because these revenues have been included. Double charging, so levying a direct charge for a laptop at the time it's purchased on a function and then recovering the cost of that laptop through depreciation charges included in the overhead allocation costing. Limitations, there's always limitations associated with a cost allocation process. What we're trying to do is just adopt a mechanism that fairly allocates the actual costs incurred by council. It can be resource intensive to do this, however, and quite manual, particularly initially where you haven't set anything up. You need to come up with all of these cost drivers, and sometimes collecting all of that information can take time. For example, the administration building, you need to work out how many square meters are occupied by each function. Obviously, you have to go out there and measure it. Overhead allocation mechanisms, they're not intended to produce support services costs that are reflective of what may be incurred if the services are outsourced. As such comparisons should not be made. All we're doing is identifying cost buckets and coming up with a fair way, or the fairest way, that we can allocate those cost buckets out to each function within council. You should always undertake a sense test of allocated overhead. So as I went through before, the water and sewerage function there, function by function, is it appropriate that they're getting charged $50,000 for HR, $70,000 for IT? It just, if you eyeball it, it just highlights if anything sticks out. So if roads or works is getting charged a significant amount for the administration building, there may be an issue because most of the workforce is external and doesn't use it. How do my overheads compare? So based on around 15 councils, I think, or 16 councils, come up with proportion of total operating costs being labour, goods and services expenditure, excluding depreciation and interest. So what overheads are being allocated divided by total labour, goods and services expenditure for each of these businesses. Water and sewerage, there's a range of 11 to 22% with a median of 17. Works 5 to 22 with a median of 15. Quarry 6 to 8 with a median of 7. Waste 5 to 19 with a median of 10. Large airport, so with passenger services, 10% median within 6 to 16. Sale yards 12%, 7 to 17. Plant 11, 9 to 17. Holiday parks, caravan parks 9% with range of 7 to 11, and building services 35%, with a range of 18 to 47. So this can just give you a bit of an indication of where you may sit if you calculated these. And if your overheads are questioned, which they generally will be, you can use these benchmarks and say, well, we're within the benchmark range and pretty close to the median. I've also run benchmarks of operating cost per full-time equivalent. So this is before any governance costs are taken off. This is just basically human resources, workplace health and safety. The average or the median operating cost per employee of council is about 5,800. The allocated cost, so this is after any adjustments for governance and after overheads have been allocated to overheads, is 6,000. And not only have I done the operating cost per FTE of council, also done percentage of total council labour, goods and services cost for each of these functions. So 2.75% for HR, IT is the highest, 5.1. I've been doing this for many years, and the IT percentage just keeps growing. So again, these will be up in the presentation that you'll be able to access and look at later. So just a quick session recall before we have questions. We want to ensure that utility charges, business unit revenues, cost recovery and regulatory fees and charges are set with reference to both recouping the direct costs and indirect costs, including overheads, so that we minimise reliance on the general rate, which is a funding mechanism of last resort for council to remain financially sustainable. Your overhead allocation should be transparent and equitable to the extent practical given resourcing limitations. The most comprehensive activity-based costing approach obviously will provide end users with the greatest degree of confidence, but you should consider what's best for you using the 80-20 rule. We don't want to throw the kitchen sink at it if you don't have a kitchen sink. So it's best to have a a mechanism in place rather than no mechanism. So what is best for you? We need to exclude those governance costs and don't net off the general revenue sources. Use those benchmarks as a rule of thumb to assess the appropriateness of the overhead costs or charges you've come up with. The overall objective is to ensure that your allocation mechanism is defensible. And it's not meant to reflect what happens in 1 year. It's meant to reflect what happens generally over the course of a long period of time. The final point, though, is that no one likes to pay for overheads, and end users will always question what they are charged and will always think that they are being overcharged. So that's the content in terms of the presentation. So I'm happy to take questions now.
So we're just gonna try this because while Gavin was talking, I lost power. So hopefully, yeah, living in remote areas, rural areas, and the generator didn't kick in. So right, you can hear me okay then, Gav?
Yes.
Wonderful. There may be a little bit of a delay, so I really apologise to our attendees. Please bear with us. We do have some questions coming in, and they're quite complex. So, Gav, let's have a look at the first question. Can I please have clarification on the removal of the FA grant, so the financial assistance grant? Is this only for end users calculation? If our overhead calculation is for between business units and the FA grant is 100% included in general, should it not be split across the other, for example, water, sewer and waste?
It shouldn't form any part of the overhead allocation process. It's merely a funding mechanism for council financial sustainability. So if I'm trying to work out what the cost is of finance and providing finance services, that general assistance grant is not a consideration. I'm a finance function. I'm operating with 10 staff. I just need to work out what the cost of providing management accounting services and financial accounting services to the water section, to the waste section. And the financial assistance grant doesn't have any impact on that. You shouldn't be using the financial assistance grant to subsidise the provision of corporate support services. That is used to actually subsidise the provision of roads and parks and the like.
Well, thank you for that. I guess if the person who put that question in would like any further clarification, please reach out to Gavin for a chat. So question 2, what is the best practice in terms of running the journals to post the overheads against respective accounts to ensure areas are getting timely and up-to-date accounts?
Yeah. There's a couple of ways you can do it. One, I guess there's 2 aspects to it. One is, do I journal, say if I'm charging waste 500,000, do I journal to all different overhead functions, 10,000 IT, 20,000 HR, or do I just put it back to a control account, which is the way that I would do it, so that you still understand what the cost of providing IT and HR is on a gross basis. You probably should be charging it monthly. It depends what you do for other internal service type arrangements, such as fleet and plant.
Good point. Hopefully, if you're going to go to the point of monthly, you have a system where you can do your reoccurring journals as well. So.
It's just a simple divided by 12.
Yeah.
Let's apply that at the end of every month.
Yes. Okay, so what have we got here? Question 3. What is best practice in terms of frequency of updating the cost drivers? Should this be done?
Yeah, so I generally would not update every year, particularly for those that take time. So you're not going to be shifting chairs, hopefully, every year. So say your square meter for floor space, I'd update it every 3 years, maybe even 5 years. But there'll be others that do change on a regular basis. Maybe FTEs, but again, maybe I'll do that every 2 years. So have a schedule of updating, not everything every year. You might say, okay, for devices and FTEs, that does change quite a bit. Let's do that every 2 years, but let's do it in alternate years, so that I'm minimizing the resourcing required to undertake those updates. You do need to update, obviously, the cost of the overheads every year. Not necessarily the cost drivers, but the costs that you're trying to allocate out.
Yeah. Okay, well, we've got another one here. What would some examples of the functions of council that also provide overheads to other functions and thus wouldn't have overhead costs allocated?
Other functions. So I'm not
Oh,
quite getting.
yes. So some examples of the functions of council that also provide overheads to other functions, so they wouldn't have overhead costs allocated. So would you allocate overhead costs to IT? Maybe.
Well, we would be allocating HR, finance, and everything to IT,
Yeah.
and then allocating it out. But again, that's only in that comprehensive situation where we're allocating overheads to overheads and end users. If you just want to allocate overheads to end users, then you don't have any cost drivers for overheads. You just have cost drivers for end users. The issue with that is, as I mentioned, is that you're not recognizing the circular nature of overheads using overheads, and potentially some overheads may only ever support overheads. So how do you recover the cost of that? So if I'm the corporate services director, how do I allocate my costs? Because I'm allocating them to overheads only. And if there's not that circular process, I'll allocate it out to overheads and it'll never go down to your end users, and it'll just be a lost cost. And there have been instances of that happening as well, if you only have that single iteration.
So what do you see, because you've, like we said at the beginning, you've been doing this for over 25 years. So what sort of models are you seeing with small councils versus larger councils? And are there any that you're seeing who are not doing the overheads for some reason?
Yes, some councils don't do overheads. Some councils do part overheads, so they might just charge for IT. Some councils just come up with an estimate to apply to some business activities, apply 10% overhead. Others just want to know, what do I charge water and sewage? What do I charge waste? And that's it. And they'll have some process. But there are a lot of councils out there that do the comprehensive approach. Some do just apply a percentage on costs and have it automatically go through their systems. Again, that's the simplest approach, but not necessarily the most accurate or equitable. So there are a range of methods being applied out there.
So you also said in your presentation about some of the other states having a mandatory obligation in other states. What can you expand on that one? That's curious to me. what states are we talking about, and what are you seeing?
Yeah, New South Wales, I believe Victoria as well. Basically, they have to have a process, and they have to journal it through to every cost centre. What overheads are identified for each of those areas.
Is it a prescribed process, or is it just that they have to have
Just that
a
they have
process?
to have a reasonable estimate. Yep.
Okay. Well, it sounds like if we'd like an education in overheads, we should take a visit to New South Wales or Victoria as well. So
Yeah, it doesn't necessarily mean they're best practice either, based on my experience.
So we don't really have any other questions coming through at the moment, and my internet and my battery is hanging on, which is great. So we might wrap it up here, and thank you so much for your time and giving to the LGFP and our members in the audience. And if you are joining us at our conference coming up in a couple of weeks, Gavin will be there. AEC are a sponsor, and Gavin will be on site. You bringing anyone else in the team with you, Gavin?
Graham
as
Jarvis
well?
will be coming as well. And if you have any other questions, just come and see me, have a chat.
Yes, but no pinball machine this year,
No.
I'm told. So
It's hard to source.
what will you have for us instead?
No, I don't know. Don't know yet. I'll have to have a think.
Well, I just wanted to say thank you to everyone out there in the webinar land, and thank you so much for your patience with me with my communications issues. These things happen when we live in Australia and in rural areas in particular. So Gavin's presentation will be circulated to attendees in the coming days, and a copy of the webinar recording and presentation will also be available on our LGFP members in our members library. So as I just said, our next event in person is our conference in Cairns in Tuesday the 18th to Thursday the 20th of November. Online registrations for the conference are closed, but if anyone wants to inquire about a late registration, please send an email to admin@lgfp.org.au. So this is our last webinar for 2025, so keep an eye out for information early next year when our 2026 schedule is released. And also, feel free to let us know what topics that you'd like to see webinars. The overheads one is very interesting, so maybe there's some other ones that you'd like to see, some technical ones. But thank you everyone for attending, and thank you again, Gavin, and enjoy Oasis. And I hope to see many of you in person in Cairns. Thank you very much.
Thank you.